Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from Ashford Hospitality Trust. And let me tell you, it's not exactly a 5-star stay, more like a budget motel situation, especially when you see how they're trying to pinch pennies. We're looking at what's called an 8K filing. Companies use these to tell investors about big news, things that could really change how the business is doing. In this case, Ashford Hospitality Trust filed this report on March 12th, 2025. The big headline here is that Ashford is trying to cut costs, and not just by skipping the mint on your pillow. They're talking about slashing corporate expenses to boost their earnings. They're calling this initiative GRO AHT, which sounds more like a caveman grunt than a business strategy. But hey, if it works, the goal of this GRO AHT plan is to add $50 million to their yearly earnings, which could make a big difference for their shareholders. Ashford's advisor, Ashford Inc., which is a separate but related company, is helping them find ways to save money. The savings include things like cutting back on legal fees, accounting costs, consulting fees, office supplies, and even consolidating bank fees. Basically, they're looking at every line item to see where they can trim the fat. Ashford Trust thinks these moves will save them over $4 million each year. This is on top of other cuts they've already made, and altogether these savings could increase their earnings by more than $18 million. The company says they're working closely with their property managers and Ashford Inc. on more cost-cutting ideas. They promise to keep investors updated as they roll out the plan. The filing was signed off by Durek S. Eubanks, the Chief Financial Officer, on March 12, 2025, 5:10 now. Let's step back and think about what this all means. Ashford Hospitality Trust is clearly feeling the pressure to improve its financial performance. The GRO AHT initiative shows they're serious about cutting costs and boosting earnings. However, relying heavily on cost cutting can be a double-edged sword. On the one hand, it can free up cash and improve profitability. On the other hand, if they cut too deep, they could hurt the quality of their hotels, which could drive away customers. Also, depending on cost cutting alone isn't a long-term solution. They need to find ways to grow their revenue, not just shrink their expenses. From the information available in this filing, it's hard to say how successful GRO AHT will be or what areas beyond cost cutting it may address. $18 million in incremental EBITDA sounds good, but it depends on where that money is coming from and what they're giving up to get it. We'll need to see more detailed financials in future reports to really judge the impact. I do see the cost cutting as a positive direction for the company. However, I think Ashford must focus on occupancy rate, customer satisfaction and revenue. Thanks for watching. If you found this breakdown helpful, please like, comment and subscribe for more corporate deep dives.